Are you setting up an accounting system for your Web3 business? If so, this video is for you. The most important step after selecting your technology stack for your Web3 accounting system is establishing your chart of accounts. What is a chart of accounts? A chart of accounts is more or less a listing of every category that's available for you to apply to any given transaction. It's going to serve as your roadmap for how do you categorize transactions and how are those categorized transactions presented on your financial statements. So this is really the foundation that you're setting for your accounting system. And that's what makes it a very important step. So that's what I want to go over here today. Now, one thing that I want to make sure I emphasize up front, there's no one size fits all chart of accounts for Web3 businesses. I've charted dozens and dozens of these accounts for various companies, and each one is going to be unique to the specific business. So you want to take that into account when you're establishing the chart of accounts for your business. We want to make sure that this is thought out and it's logical and it involves the stakeholders of your business, your finance team, your CEOs, so everyone can come together and make sure that we're creating the best chart of accounts that's going to present the financial statements in a way that makes them as clear and useful as possible. So the chart of accounts is going to break down all of the categories of your financial statement. So it's going to include asset categories, liability categories, equity categories, income categories, and expense categories. Again, because this isn't one size fits all, it's not conducive for me to give you like a full list of everything that should go in these categories, but to give you somewhat of an idea, when we're dealing with assets, we're going to be looking at various crypto assets, for instance, that are held across wallets and exchanges, cryptos that are staked in staking pools or liquidity pools. And, all of these assets are going to be presented in the balance sheet. We'll go over exactly how, because there's a few different options to present them. I'm going to go over that here in a moment. Liabilities, crypto borrowings, crypto payables, deposits from customers for deferred revenue that go into the company. These are all going to be categories that we want to create on our chart of accounts that are going to hit your liability section. And then we have income, staking rewards, mint income, grant income, income from sales of certain products or NFTs or something that you're selling on chain, service-based income. All of these income sources are going to be categories that we want to chart that hit our profit and loss statement that are going to hit the income section. And then, of course, expenses. This can vary a lot as well. Some things we're going to want to make sure we include are gas fees, payroll fees, cost of sales, and other related business expenses that you may be incurring on chain. So then there's another layer of complexity that I think is beyond this specific video, and it's going to be the presentation of certain types of assets based off of GAAP, based off of IFRS, or whatever accounting methodology you're using, as to whether to classify some of these crypto assets. Are we going to classify them as long-term intangible assets? Are we going to classify them as other current assets? At a high level, this is going to depend on the overall nature of that given asset and what its purpose is in your business. Again, I don't want to get into too deep in details on that, but that is something else that you're going to want to assess, particularly when we're looking at, charting out the asset categories for these different crypto assets. There's the question of, should they be a current asset? Should they be an intangible? It's going to vary company by company, and it's also going to vary depending on what accounting methodology you're using. Now, one area that I want to discuss further, because I think that this is a big question that everyone's going to encounter once they really get into setting up their chart of accounts, and that is, how should you present your digital assets on your balance sheet? Now, like I just said, there's the question of intangibles versus current assets. Let's put that to the side and let's talk about the next step to presenting your crypto assets on your balance sheet. And that is basically, how are we going to break them out? There's basically three options. I'm going to outline the three options, and then I'm going to basically tell you which one I like to do most of the time. Again, this is all, this changes company to company. The first option is grouping everything by wallets. So what that would look like is, say you have 5 different wallets. Each one of those wallets would be mapped to your balance sheet. And then on the balance sheet for any given period, on a wallet by wallet basis, you would show the asset balances. And that's what wallet mapping would look like. The other option would be asset mapping. What would that look like? Each asset that you're holding across all 5 of your wallets would have a category on your balance sheet. And then rather than showing the balances at any given period on a wallet basis, we would show them on an asset basis. So your 5 wallets wouldn't be on your balance sheet in this example. You maybe have 10 assets across those 5 wallets that are in your financial statements. So between those two choices, you can show things by wallets or you can show things by assets. And there's different reasons that you would want to use both of these approaches. Some companies may have many assets across wallets and they just want to look at them on a wallet basis. Some companies may only hold a couple assets and they want to just look at them on an asset basis. So again, this can vary somewhat company to company. Now, there is a third option. The third option is what we most commonly use when we're charting accounts for clients, because it's usually going to give the clearest picture. Although the first two options are still on the table, but the third option is to group the assets on the balance sheet by wallets and by assets. So the way your balance sheet would look, if you had 5 wallets, all 5 of those wallets would be listed. And then underneath that, the major assets that are in those wallets would also be listed. So your balance sheet would show wallet balances by asset, wallet balance by asset, wallet balance by asset. This, from my perspective, in most cases, is going to give the clearest picture, because it's allowing the decision makers, the finance team, who's ever utilizing the financial statements, to get a very clear picture on which assets are held in which wallets. And that usually is going to, give them the most information and make the financial statements more useful. So that's usually the option that we find ourselves using. But all three options are available. So, there's a few high level considerations you want to take into account when you're building these chart of accounts, just in terms of, best practices or tips and tricks. And number one is that you just want to make sure that you're building a logical structure. This, again, is something that's the foundation of your accounting system. So you really want to make sure that it's well thought out and everything is presented in the most clear and logical way, especially when, for instance, when we were just discussing mapping out your assets within the balance sheet. You don't want to just start batching different assets together or presenting things in an unclear or an inconsistent manner, because then it's going to start to make these financial statements much less useful. And to that point, you want to be very clear and concise and consistent in the naming conventions that you use for wallets and for assets. These want to be clear, short, and concise, and present it well on the financial statements. And one tool that we use for this, especially if we're using the third option where we're mapping by wallet and by asset, you want to leverage account codes in your naming conventions for your categories. This will really come into play if you have 5 wallets and all of those 5 wallets are holding Ethereum. We just don't want the name Ethereum 5 times on the balance sheet. We want each Ethereum to be a sub account of that wallet, and each wallet and each sub account for that wallet for each asset to have a unique account code with it. This is going to help present the financial statements clearer. It's also going to help during the accounting process, during the categorization process, to ensure that all transactions are getting booked to the right accounts. And I've harped on this a little bit, but we want to be consistent overall. We want to, use the same naming conventions for each asset, for each wallet, for each category. Now, the last thing to consider, especially when we're mapping out our balance sheet, is the level of detail that we want to present on the balance sheet. If you're holding 50 different assets and they're very small percentages of your holdings and they're somewhat inconsequential to your overall business operations, you may not want all 50 of those assets necessarily broken out on your balance sheet. For example, you may just want to have the top 5 assets on your balance sheet and the rest of them in a catch-all count if they're just smaller altcoins. But we want the financial statements to be clear. So when you do have major holdings like Bitcoin, Ethereum, or some other major holdings in your wallet, it may make sense to break those out and increase the level of detail on your balance sheet. So, there's got to be a balanced approach to this, where we want a level of detail that's making the financial statements more clear and more useful, but we don't want to add too much complexity or detail to the financial statements to where they're becoming less clear and less usable. Another important point is to make sure that you're regularly reviewing your chart of accounts and updating it as applicable. You may need to update your chart of accounts based off of new types of business practices and transactions that are taking place. You may need to update your chart of accounts if you add a new wallet, a new exchange, if you start transacting it in a different asset on chain. These are all reasons where we potentially may need to go ahead and update that chart of accounts to maintain the overall integrity to our accounting system. So don't neglect the updates. This is very important, and things in crypto move fast. So it's easy to add a new chain, add a new asset, add a new wallet, and you simply just don't add that to your chart of accounts. And all of a sudden, things start to become less clear. Another consideration is make sure that when you're charting accounts in your subledger, that the naming conventions and the overall approach that you're taking to your chart of accounts is going to be compatible with the other softwares that you're using, primarily with your general ledger. That is another very important step. So those are really the big steps to setting up your chart of accounts. Once you have your chart of accounts set up properly, this is going to create a very smooth accounting process for you from that point forward, because each transaction that you categorize should be flowing right to the correct category, to the correct part of the financial statement. So really, your month-end closes are just about hitting those right categories and doing a proper reconciliation and due diligence process, and you should have clear financial statements from there. So those are really, the big steps and considerations that you want to take when you're establishing your chart of accounts. And if you take these steps, it's going to increase the overall accuracy and usefulness of your financial statements. So if you're a Web3 business and you're looking to set up an accounting system, and you're at the point where you need to set up your chart of accounts, or maybe you're not even at the point where you need to set up a chart of accounts, maybe you're still at the software selection stage and you're dealing with all of the options that are available from the subledger and general ledger options, that's where Camuso CPA can help. We can help you select the best software stack, establish a proper chart of accounts for your accounting system, and then we can maintain this accounting system on an ongoing basis, so you always have clear and accurate financial statements. So if that's something you need, reach out to me and my team today at CamusoCPA.com, and I'd be happy to speak with you in detail about how we can accomplish this for your company. I hope that you gained some perspective and value from this video today. Until next time, I'm Patrick Camuso, signing off.